The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawk Box Europe. I'm Karen Cho with Juliana Tattelbaum. These are your headlines. President Trump warns of pharma tariffs of as much as 250%, with extra levies on semiconductors also in sight, as the president tells CNBC he wants to force producers back to the United States.
It's going to go to 150%, and then it's going to go to 250% because we want pharmaceuticals made in our country.
Novo Nordisk sales surged in the second quarter, driven by growth in its flagship obesity drugs, a week after a profit warning wiped $70 billion from the drug maker's market cap. We'll speak to CFO Carsten Munk-Knudsen later this morning. And Commerzbank net profit drops as it books restructuring costs, but the German lender hikes key targets for the year. CEO Bettina Orlopp tells CNBC she sees positive drivers ahead.
We see really an improvement of the sentiment. We have just seen the IFO data improving for the fifth time, and that really means that we have a lot of tailwind and good momentum, which will also support us in the coming years.
A ton of news flow this hour. We had a very significant interview yesterday with the US President tackling the Fed replacement, the next head of the Federal Reserve. But I thought very key comments too on sectors from pharmaceuticals, whether we do have a stepped up percentage coming to 250%. We know the president has wanted to lower drug prices, but does it achieve that by putting monster tariffs on to bring back production to the US is one thing, but having lower drug prices might be another. And for me, covering a lot of technology, semiconductors, we've got something coming over the next week. Already there have been stepped up commitments from the likes of Taiwan Semiconductor. And don't forget, a lot of the big advanced semiconductors are made in Taiwan. And those commitments are $165 billion to date to invest in the US. Where does it leave those plans if there are tariffs on top, trying to encourage more production in the US?
It was a fascinating and wide-ranging interview with our colleagues, kicking off with the BLS news flow around President Trump moving to remove the commissioner of the Bureau of Labor Statistics. I think when it comes to pharma, it's really interesting to see President Trump's approach here and how it differs to his approach to country-level tariffs. The idea here, to your point about threatening an up to 250% tariff on these pharma companies, it's basically a stepwise plan to try to incentivize pharma companies to invest in the United States, giving them time to do that, recognizing that it takes time to set up facilities there, and basically suggesting if they are willing to invest in a huge way and make pharma products in the United States, they can avoid those down the line. But it will be great to hear from Novo Nordisk. We're going to speak to them later in the show, how they are thinking about this new tariff that is now, looks like we're going to get news flow within the next week, President Trump said.
That's a job creator. And it is a drug supply chain security policy, but is it a lower drug pricing regime? And that has been one of the real sticking points for the president. I mean, are they on different ends of the spectrum in terms of achievable outcomes? But of course, we will have plenty more over the course of the show as we speak to Novo Nordisk as well today. Now, US President Donald Trump spoke to CNBC yesterday in a wide-ranging 40-minute conversation covering topics from the search for the next Fed chair to Indian purchases of Russian oil and tariffs. One sector which has been seeking clarity over US levies is pharma. Speaking to CNBC, Trump laid out his plans, suggesting the sector could eventually face the highest rate he has threatened so far.
On pharmaceuticals, we'll be putting a initially small tariff on pharmaceuticals, but in 1 year, 1.5 years maximum, it's going to go to 150%, and then it's going to go to 250%. Because we want pharmaceuticals made in our country.
Trump also addressed his plans for other sectors, including semiconductors.
Within the next week or so, we're going to be announcing tariffs on specifically. This is a separate class than the 15% tariffs on sort of everything. These are excluded classes, I call them. I like to call them excluded, like steel, aluminum, etc.
Right, the
well,
232.
We're going to be announcing on semiconductors and chips, which is a separate category, because we want them made in the United States.
Let's get a look at the market reaction. These are the Asian chip stocks, which are trading lower in the overnight session. Now, also on the agenda was the European Union, with the president touting what he said was payment from the bloc. Take a listen.
Everything is open, 100%. In addition, the EU is going to pay us $650 billion. We're going to round it off, actually, because of certain things, to $600 billion.
We have been trying to figure out the details on that, Mr. President, so
well, there are no
the clarity on that.
The details are $600 billion to invest in anything I want. Anything.
Okay.
I can do anything I want with it.
A spokesperson for the European Commission told CNBC that the $600 billion number came out of conversations with European industries and economic sectors on their investment intentions in the US in the next few years. However, while the number was coherent, it was also non-binding. Swiss President Karin Keller-Sutter has touched down in Washington in a last-minute attempt to reduce the Trump administration's 39% tariff on the country. Bloomberg has reported that Keller-Sutter made the trip without an invite to meet President Trump, with the State Department confirming a meeting with Secretary of State Marco Rubio is scheduled for today. Switzerland said that it is ready to make a more attractive offer to the U.S. administration ahead of the August 7 deadline.
Let's get a check on markets and how the Wall Street session fared yesterday. We saw all three of the majors end modestly lower. The tech-heavy Nasdaq pulling back about 65 basis points. The Dow posted its sixth negative session in the last seven. 7 out of 11 sectors in the S&P were negative, led to the downside by utilities, which lost about 1%. As far as the Asian session goes, you saw a look at the chip makers, the chip names in Asia trading lower. Away from those names, though, we are seeing a modestly positive session come together. The Nikkei 225 up about 65 basis points. Over in mainland China, the Shanghai Composite up about 0.4%, and very modest gains for the Hong Kong and South Korean markets. As for Europe, more earnings this morning for investors to digest. The early indication is we are going to see gains in Europe, adding to yesterday's move higher. We actually have now seen two positive sessions in a row for the Stoxx 600 after that bruising sell-off on Friday. So investors are using this as an opportunity to buy the dip once again. We're looking at the DAX gaining about 75 basis points at the open. The FTSE MIB, CAC 40, and the FTSE 100 also all poised for a positive start. As for Wall Street, what's in store for today's market open? We're looking at gains there as well. Wall Street called higher. In focus, results from Disney, Uber, and McDonald's.
President Trump used his interview with CNBC to set out plans for the selection of Jerome Powell's replacement as Fed chair. He said Treasury Secretary Scott Bessent had ruled himself out of the running and that he has narrowed the field of potential replacements to 4, including former Fed Governor Kevin Warsh and National Economic Council Director Kevin Hassett.
He's very good. Sometimes they're all very good until you put them in there, and then they don't do so good. But a lot of them, I think he's a very good guy. I think I say Kevin and Kevin. Both Kevins are very good. I have 2 other people that are doing well. Look, it's in the end there are numerous people that are qualified. No, I think that it'll be 1 or 4 people.
Are the other 2 names?
They're going to make the decision soon.
Recent week labor market data has seen investors sharply raise their bets on a Fed rate cut at next month's meeting, with markets now pricing an 87.5% chance of a 25 basis point move lower, according to the CME's Fed Watch tool. Bank of America CEO Brian Moynihan told CNBC his bank still expects the Fed to hold steady.
Our economists believe there'll be no recession. They believe the economy in the U.S. will go about 1.5% this year. They believe that the Fed will not cut rates because inflation will take longer to get down.
That the Fed will not cut rates?
During 25. They'll cut them in 26. And they've been on that for a long time. And they believe that, and even when the tariffs came in, they said, that'll cause less economic growth this year than they otherwise scheduled, but still no recession.
Atakan Bachuskan, a U.S. economist at Berenberg, joins us now. Great to have you with us this morning.
Thank you for inviting me.
So interesting that you say, even after the weak jobs report on Friday, that a Fed rate cut in September remains unclear. It seems like Brian Moynihan is in the same camp. Help us understand the reasoning after this weak report suggesting that the labor market is not as strong as we had expected. Why do you think the Fed could remain on hold?
Yeah, I agree that the labor market is not as solid as we once thought. Last Thursday, we thought the 3-month moving average of NFPs was 150K. Just to find out on Friday that it's actually 35K. But, the Fed's job is not to make sure that we have solid non-farm payroll gains. The Fed's job is to ensure that we are in a maximum employment environment. And that's when the unemployment rate is at 4.2% or around 4.2%. And when you look at the report on Friday, you see that the unemployment is at 4.2%. And on many measures, the labor market is still balanced. You still have vacancy to unemployed ratio back to its pre-pandemic levels, inflation-adjusted wage growth on a year-over-year basis, 1.3% in line with productivity growth, layoff rate at historical lows. I mean, this is not a labor market that needs rate cuts, in my opinion.
You make an interesting point in your research, and this is a more structural point around the labor market, that the immigration slowdown partly explains the tepid headline prints. Why is this such an important point?
Yeah, so I mean, in 2023, the US had over 3 million immigrants coming into the country. Net immigration was 3.3 million. 2024, just a little below 3 million. So this year, I mean, it's not going to even be 1/3 of the level that was last year. So the break-even rate is just way lower than last year. I would put this break-even rate at around 80K. So while the labor demand is kind of weakening due to like uncertain environment and tariffs and all that, labor supply is weakening at the same time. So you still have a balanced labor market. I mean, it's really the immigration that drives the labor market in the US. So it's really not surprising to see weaker headline prints because immigration is just slower.
Smaller labor market.
Exactly. Yeah, exactly.
That immigration story may persist. I was reading this morning that it was Palantir Technology that had helped the government crack down on some of the illegal immigration. The success they were getting was thanks to that advanced technology, which does give you a narrative that it's not a one-off. It's not a pushback just because the US administration has declared its immigration policy, that there's actually something behind it. In terms of what we're talking about on the number, the moving average of 35K that you mentioned for the labor market, at what point, though, is that a negative for the US economic growth story? Because it seemed to be a number that was higher than that was much more consistent with steady US growth. So what number would that be?
So, I mean, I think to see the Fed move and to like say that the US is slowing substantially and it's on the verge of a collapse, the unemployment rate really needs to reach close to 4.5%. So we need to see this like 20K, 30K, 3-month moving average on a consistent basis. But when you look at the May and June, that was really when the impact of peak uncertainty in the US was. I mean, April, the Liberation Day tariffs and stuff. So the labor market was kind of frozen. And now, we have more clarity on the trade policies. We know what the fiscal plan is going to be this year. So the businesses kind of have a clear outlook. So
I take your point about what's coming as we look down the road as to whether the tariff situation clears up. But that said, we've still got sector-specific tariffs coming. Just this morning, we've been talking about pharmaceuticals and semiconductors, and there's still a lot of country tariffs to be sorted out. At the same time, in terms of negative news flows still, we're expecting a fairly significant revision in September to non-farm payrolls, which could further undermine the 35K number, right? So doesn't that mean we could be getting a scenario of even bleaker US economy before we get to good news?
Yeah, I mean, there could be more downward revisions, that's for sure. But it's really the unemployment rate that matters. And when you really dig into the details of the July report, you see that there's 275,000 more people that entered unemployment for the first time. That has never happened in history. That is the largest month-over-month change in the new entrants into unemployment in the history of the United States. Since 1967, that represents a 5 standard deviation event. So when you have such a big spike in such a volatile time series, it's only natural to assume that it's going to come down next month. So I wouldn't be surprised to see a 4.1% unemployment rate next month. And the Fed will be looking at over 3% inflation in the September meeting. If you have a balanced labor market, 4.1% unemployment rate, and rising inflation due to tariffs and slowing immigration, it's really not an environment for rate cuts, really.
What's your read on the inflation picture in the U.S. and has your expectation around U.S. inflation changed over the last couple of weeks as we've got more clarity on where tariffs are landing?
I mean, over the time, my inflation outlook has evolved a lot because I had no idea what the tariff rates were going to end up with. But I think it's kind of safe to assume that the U.S. effective tariff rate is going to probably be around 15% or so. And I see inflation ending the year at like 3.3%, 3.4%, the core inflation. And it's really not just the tariffs neither. I mean, everybody's focused on the tariffs because it's all the headlines. But it's really the slowdown in immigration that's going to create labor shortages, which is going to push up wage growth and then further inflation. I mean, we have a weaker dollar as well that really nobody seems to be talking about. We have elevated near-term, short-term inflation expectations. I mean, everything really seems to be pointing at a higher inflation environment right now.
Let me ask you about the Labour Department and the Fed and the integrity of those two administrations or those two institutions, because we saw the head of the Labour Department sacked late last week. Questions about any replacement, whether there would simply be a lackey for the US president, and what that means for the integrity of the data that market participants are getting, as well as the Fed. And we know there's going to be a replacement governor after Kugler stepped down late last week as well. We know that the Federal Reserve chair position is also up for grabs in the next couple of months, perhaps. So these will be entwined in terms of appointments. How do we think about the independence of the Labour Department and the US Federal Reserve?
Yeah, I mean, the reason why there are so many big downward revisions is not because the BLS is like doing a bad job or anything. It's just because the response rates are very low. There's a big gap between the first collection rate and the second collection rate. So the struggling businesses, there's kind of a bias. They report their numbers a bit late, and then you get a downward revision. But all these things about, threatening Fed's independence, like firing the BLS commissioner, and all these erratic policy making, that's just really pushing up the risk premium on US assets. And that's why we kind of see dollar decoupling from yield differentials. And I just see those things as higher risk premium, higher term premium, and translating into higher long-term yields in the US.
Can we get your take on President Trump's comments yesterday? He spoke to our colleagues in the U.S. about the investment pledges that other countries have agreed to make in the U.S. Japan agreeing to invest $550 billion. The EU agreeing to invest $600 billion. He likened these to signing bonuses. Like if you're a baseball player and you're getting a signing bonus for joining a team, he basically said, I'll have free reign to decide where this money goes. But then you listen to the Europeans and they say, this is actually all about intentions, what companies are willing to invest and where they want to do it. So how do we sort of square those two lines of thinking? And is there actually a world in which President Trump could just choose, completely on his own volition where this money goes and where it's coming from?
I mean, the EU cannot force private companies to invest in the US. It's up to the private companies to invest in the US. It's just not how it works. And I mean, last year, the foreign direct investment from Europe to US was 150 billion. And now they need to do an additional 600 billion. I don't know where the money will come from. And even if it comes somehow magically, it just come at the expense of domestic investment, really.
And at a time when there is supposed to be a lot more domestic investment with so many fiscal pledges coming
the
through.
market's priced in that already, so
What's the wash-up of the tariffs? And from what we're hearing, the US president wants to bring back advanced manufacturing. Some of it the US isn't even capable of, in form of semiconductors, advanced semiconductors. Very few countries are actually, just really Taiwan having the lion's share of this monopoly when it comes to that part of the tech universe. Is it possible for the US president to create a landscape in the US where these jobs do come back, but at a lower entry price in terms of the cost base of the finished product?
I mean, if you want manufacturing to come back in the US, you need workers as well. That type of restrictive immigration.
These days with AI?
I mean, you still do. Some workers still need some workers. That restrictive immigration policy is kind of against that, and erosion of trust in institutions. You kind of need foreign investment as well. That's also really not playing out well for the U.S. really.
Interesting comments about the mix of events you need to spur that investment. Thank you so much for joining us today.
Thank you.
Atakan Bakaskan joining us, US economist at Berenberg. Ahead on the show, a key UK think tank delivers a blow to Chancellor Rachel Reeves, warning of a £51 billion black hole. And sources telling CNBC OpenAI is targeting a secondary share sale at $500 billion valuation. We'll have more. And don't miss our conversation with the CFO of Novo Nordisk after the pharma giant reported a surge in second quarter sales. That interview is coming up at 9 London time. UK Chancellor Rachel Reeves could be facing a £51 billion black hole in the autumn budget. That's according to the National Institute of Economic and Social Research, which warns she faces an impossible trilemma. The think tank argues that the UK Chancellor cannot comply with her fiscal rules, honour spending pledges and avoid tax increases for working people, arguing she needs to find an additional £41 billion for the government to meet its fiscal targets by 2029-30. And of course, the front page of the FT this morning, just how many company directors are leaving the UK. There's about 1,000 more stepped up from last year. So the number 3,790 company directors reporting leaving the UK.
And that's all before we get to potential tax hikes in the autumn. A trilemma for sure. Now, turning back to corporate news, Novo Nordisk has called higher pre-market after Q2 sales came in 18% higher on the year at nearly 77 billion Danish crowns. The sales in the company's obesity care segment rose by almost half on the year to more than 20 billion krona. Novo kept its revenue growth outlook at the lowered 8 to 14% range for the year and said it will sharpen its commercial execution further. Karen Gilchrist joins us now with more on these numbers. Karen, Novo shocked the market just about a week or so ago with its profit warning, severely cutting its outlook for the year. What incremental news did we get from the company this morning?
Yeah, a little bit more colour today after, as you mentioned, that real shock announcement yesterday that saw shares drop as much as 26%. Now called a little bit higher as we get second quarter earnings broadly in line with expectations. Now, much of that was telegraphed last week with the high-level announcement of first half results, but we've got a little bit more colour here. We're seeing that second quarter overall sales up 13%, and more colour on Wegovy as well, which jumped 67% to 19.5 billion Danish crowns. That's just slightly shy of expectations, but certainly a huge gain, even as we face these pressures from compound drug makers, which have of course been weighing on the US market and sales of Wegovy there. The company announcing last week that part of the reason for its cut sales guidance was as a result of the continued momentum around these compound drug makers, which even after a deadline that should enforce the end of their sales, they are still continuing to make them. So the company's showing that there is still a bit of momentum behind the drugs here. Also announcing that it's going to be sharpening its commercial execution, i.e. making some cost cuttings after we've seen that huge share price decline last week, as mentioned, and that it's going to continue to focus on direct-to-consumer sales. This is somewhere where it's seen sort of lackluster take-up as we've seen the competition from the compounders, but it says it's going to double down on that in the US market.
Can I ask you about a pill versus an injection? That seems to be some of the technology that the company is chasing. How significant could that be, given it's more convenient, of course? Taking a pill versus a needle is something that some consumers want to choose. What's the market for that?
I think that is the big bet, not only for Novo Nordisk, but other competitors as well, because they see it as something that's potentially more efficacious, and it may have lower side effects and also much more easy for consumers to take. So that's something that not only Novo Nordisk is pursuing, but other companies as well. So that's potentially the next generation that we're looking at.
Novo has ascribed a lot of the challenges it's facing to the compounding pharmacies. And just today, they're saying we filed 14 new lawsuits against compounding companies in the United States just yesterday. But how much of the competition that they're facing is actually coming from those compounding pharmacies versus Eli Lilly and their Mounjaro drug, which many experts say is a more effective version, and that's simply what's happening here. They're losing market share, not necessarily to the compounders, but to one of their key competitors.
Absolutely, and Mounjaro came to the market later, but they've really accelerated and they've doubled down on the US market and seem to have nailed it in a way that Novo Nordisk hasn't. And as you mentioned, the efficacy of that drug does seem to be slightly greater results in terms of overall weight loss and preference generally from consumers towards that drug as well. So I think it's quite easy, or it's potentially easy to put it on compounders and say that's one element of it, but certainly there are big players as well out there that are weighing on Novo sales as well.
I'm speed reading through the report. I'm up to page 8 of the 39 pages. I'm yet to hit the page that says something about US policy. This is one of the companies that the US president wrote to the other week, one of the 17 companies, and calling for some sort of large-scale change by the end of September. What is the company meant to do in that context?
Only a really cursory mention of tariffs and no concrete comments. We've had the president coming out yesterday and saying that the tariffs could be as much as 250%. The only colour we had last week during the announcement of the new CEO, where they mentioned that they will be continuing to double down on that US investment. It is for them the largest market. So regardless of policy, they still say that that's where they're focusing. But in terms of the tariffs, I mean, I think companies are still just trying to figure out what that's going to look like.
What is Novo's strategy for turning this story around here? I know they've got a new CEO coming in, so maybe the question is premature, but clearly the market is looking for what is going to drive the growth that is going to justify this share price after it's traveled so far.
Yeah, so we had the incoming CEO, Mike Duterte, saying last week that his focus was going to be in 3 areas. These are going to include sort of focusing on the defending the company's leadership in the diabetes and obesity market, or rather we might say sort of regaining that leadership, fostering a high-performance culture, and then realigning the cost base. So he's sort of outlined his initial plans for what that might mean. We'll be expecting more colour from that today. But he said that he's arriving with a sense of urgency and a laser focus. I don't think it's lost on him the real troubles that face this company.